Sanjay Agarwal with us of AU Small Finance Bank, also to share with us, or address some of the concerns that are brewing. Mr. Agarwal, thanks for joining us. What is the situation looking like? Are you seeing demand contraction right now? Are you also seeing withdrawals in terms of deposits? What's really happening?
No, good morning. I think these are tough times, but I think this is just a 1 week story. So we haven't seen a lot of demand going down or deposits going out, because it was a Yes Bank issue maybe for a week time, but now Yes Bank issue has been resolved. So of course there is some pressure on the wholesale and the government business, but on a retail side, it is absolutely normal. And of course, because of this anxious time, the people are more fearful, so a lot of questions being asked. But as of now, we are very comfortable.
Not sounding the alarm bell yet, but what's the outlook for the next, next 2 quarters? And also, if you take a look at the way premium financial institutions have collapsed, I mean, as of now, there seems to be a large-scale aversion to investing in financial companies, especially higher leveraged ones. So what does that mean going ahead?
No, I think that you're saying in the perspective of capital markets, because for me, business is as usual, because I think you're talking about HDFC Bank or Kotak and ICCI, everybody is functioning as a very normal bank. We are raising money from them also on a day-to-day basis. So I think if you keep capital market apart, I don't think that, is a real challenge on the ground. Of course, it may be a long vacation for many people, but being in retail, you'll have a lot of options to come back from the customer side also, because because the EMIs are so shorter, as a small amount, So I don't think that it will blown up, out of the way that we cannot control it, But I think we have to be really careful about next 2 weeks how we look as an India story, because I believe that India will respond like China, because I'm really truly amazed by the response we have given as a citizen. We have not gone above the mark, above the levels. So I'm pretty sure that even finance industry is being a leveraged industry, but we still will manage quite well in times to come.
As you said, now we'll be monitoring, what happens over the next couple of weeks, and going by the unpredictability of it all. Don't you think that in the current environment, it would warrant a halt on at least scaling up plans or branch expansion plans? That mustn't be going as per usual, right?
Yeah, of course, as you know, if these are testing time, you have to go and rethink your plans. And being a cricketer, I always believe that when the situation is not good, you have to take ball by ball, session by session, and day by day. So we are pretty sure that, once things will over, we can go back to our plans and build again. But as of now, I think it's more about sustainability and more predictability.
Coming back to really, I know you keep saying everything is the same on ground. It's just that everyone else seems to be reeling on the impact of this. So again, going forward, what's the outlook? Are you factoring that in, as Avan just said, to any plans? Is that going to, severely impact credit growth going forward? How are you adjusting to what seems to be the new reality?
So I think we have to actually wait for next two weeks, maybe 3 weeks, And fortunately, because quarter 4 is well secured, honestly, because this happened just on 10th of March or beyond 10th of March. So I think our quarter 4 is well secured. But how the quarter 1 performs, will depend how we actually handle our next 2, 3, 4 weeks. And for general, quarter 1 is always a dull one, because in financial services, quarter 1 always give you 15-16% of business, right? So for me, it's very good that it is happening in quarter 1. And if it's over by quarter 1, maybe quarter 2, we can really come back in quarter 3 and quarter 4. So I think we have to be really careful about next 2 to 3 weeks. And then we make our plan and judgment and the call, how we'll pan out the next year.
Hi, Nikunj also joining in. What happens to the MSC and SME space? Every small or big bank has a direct or indirect exposure to hospitality, travel and tourism, industries which are connected to the auto sector, companies which are directly, indirectly connected to aviation sector. Some of these industries have come to a standstill. Do you think, not right now, because right now everybody is in a protection mode. We are trying to protect our employees, and that's the right thing to do. But when things will normalize, payment defaults, NPA rising, EMI defaults, they have to happen, because if there is no money getting generated, obviously it will have an impact on your repayment capacity.
Correct. But I think, Nikunj, you have to also agree that, what type of exposure you would have taken and how you have built your whole risk management, right? So if for me, our tourism related or aviation related sectors are maybe not more than 5%, right? And you have to also appreciate that, how many cities we are getting affected, if it's only restricted to the metro cities, which we are now seeing like Delhi, Mumbai, Pune, so the impact may be over by maybe 1 to 2 months, right? So they might be delayed, right? And we have to come out some sort of measures to handle that, But it won't be the end of the world, because the things will come back. We have seen in the past also. And I think as we move forward, we'll figure out maybe by quarter one end that, how we really want to take the measures around the affected sector, the affected markets and affected cities, and separating from the normal one, right? So I think it's very difficult to predict as of now, but I'm very hopeful that, it will not go out of proportion.
Okay. So as of now, Mr. Agarwal, if I have to put a simple question forward, you think that things are bad, but you are not in a panic mode. You don't want to use the word profit warning. You don't want to send a message across which talks about a uptick in NPAs which could have an impact on your asset quality. You are confident that yes, business will slow down, but there is no collapse which will happen to your entire book stroke your cycle.
Yeah, I'm sure, because this thing has been noticed now on this level, because we are tracking data, we are talking so much around the media, the social media, and everywhere, right? So people has become a lot of anxious, right? So otherwise, there is always an issue around SMEs and MSMEs on a localized way, right? And we have handled that also. So in my opinion, let's wait for maybe 1 more month and then see which sector, which markets, which areas, which customers are getting affected or impacted, and then we'll take the call, right? So I'm not in panic, rather I'm very, putting everything on the ground itself to figure out real issues, right? So that we can actually solve those things.
Okay. Now, historically, when banks, they need capital, they've tapped the financial market, they've done a QIP, or they've raised capital by the PE route. Given that your stock price has collapsed, will it be difficult for you to raise capital? And if you cannot raise capital, then it's a problem in future?
No, I think why we'll have an issue on capital raise, because it's always driven by the market price, right? So I won't agree that my market has been collapsed, because we've been trading very high on our growth and all those things. So if it gets rationalized in this testing time, and we need capital, we'll raise on the market price, right? So I'm not too worried about that. If my market price is not there, I won't dilute or I won't raise. So, but we are adequately capital, because we are around 20% capital adequacy. So I don't think that AU is in that crisis moment that we need capital tomorrow and then we are not able to raise it.
Mr. Agarwal, appreciate your time. I mean, these are difficult times, and thank you for being very frank and being very honest. I mean, the update on the stock is that, look, if FI wants to sell, they want to sell.